All right, guys. So today we're going over how to use psychology and adapt to our current market, plus a nice little strategy that I've been preaching for the past couple months now. It's just break of structure plus that fair value gap retest. And I didn't take this trade on Friday. I actually missed it, unfortunately. I was eyeing it, but never took it. So this is on SPY or SPX, whichever one you were playing. And we see our pre-market levels here. We had a nice dump pre-market. And so this is our sell side pre-market level. So when market opened, we actually took out that sell side with a strong candle beneath it. So then I'm looking for that fair value gap, as we talk about, and for it to be retested. So when that does happen, we get a nice retest. We would have taken the entry, and eventually you would have come out with a 150, 200% gain. Now, the one thing that I want to talk about in this little sermon I'm giving is how freaked out you can get and why you need to size down in this current market because the candles are so damn big. So as we know, this is a valid trade because we had that FEG getting respected each time. Now, when you enter after this FEG, like I would, right here, this move up just to retest it again, nothing you can do about that. That would have put you down maybe 25% just because the candle's so big. Now, a way that I've been adapting to this is by actually sizing down. Usually I preach if you have a small account, 10% of your portfolio with the 20% stop loss is amazing. But since these candles are so big, I've actually been sizing down to about 5%. And I've just been taking my stop loss normally just at the FEG as normal. In the past, 20% would get you well past that FEG if you were holding. It was usually 10%. And that was your FEG and you could cut your losses. But now it's 25, 30% because it's so big. But when we size down like that and we can actually trust our trades and trust our setups more because we're not worried about our risk anymore, then we can start seeing that play out in our favor. And these move so fast too, which is great for scalping. Usually I set my take profit at about 15, 20%. I'm not holding. Sometimes I leave runners for bigger gains. Sometimes I do swings, which allow that 100+%. But really what I'm just looking for is a nice 15, 20% gain. And that just keeps growing the portfolio. Just do 2 trades a day, maybe 3 if you find a great setup. But if I don't find the setup that works, which is that break of structure plus fair value gap, I'm not taking anything. So that's really just the point of this whole video. I just want to share with y'all that one little trick